Are you a trader? Do you normally trade with leverage positions? Are you sick and tired of scummy centralized trading options? I mean, you've got Bybit, you've got BitMEX, you've got many other options. You're not really sure if they have the trader's best interests in mind. And this is where DeFi comes into place. Let me present you dYdX, a decentralized permissionless lending and trading platform. My name is Kierin. I create DeFi and crypto videos to make sure that you are ready for the next bull run. If you're new to this channel, then I really appreciate if you hit the like button. It helps with the YouTube algorithm. And if you also enjoy this type of content, then make sure to subscribe, as I'll be bringing a lot more video guides, how-to videos, explanations about different DeFi projects in the near future. So join me on the journey. The rocket's about to leave, so make sure you're on board. All right, let's start with dYdX, one of the best and most powerful open trading platform for crypto assets. I'm a big fan of it, and in my opinion, it's one of the best ways to leverage trade if you're into that. Before I start with the video, you have to know that leverage trading is not something for the faint heart. You have to know what you're doing, otherwise you can get liquidated and lose all your crypto position. So if you're a new investor, don't get lured into the high profit pipe dream of leverage trading. Just hodl your coins, stay away from leverage trading. But if you want to just get a little bit more gains, then maybe this video is for you, decentralized trading option. So in the beginning of the video, I'm going to explain a little bit what dYdX is, what kind of features it has, the leveraging aspect, how you can connect, add some funds to dYdX. And then at the end of the video, I'm also going to talk a little bit about the perpetuals 10x leverage option that you can buy. So I think it's super exciting. dYdX is a decentralized exchange offering permissionless lending and margin capabilities for ETH, USDC, and DAI. Users can leverage trade on dYdX with Ether and other assets such as USDC and DAI up to 5x leverage, and since May of 2020 they can also buy Bitcoin perpetual futures. The interesting thing is you can also lend your cryptocurrency. Lending means that you lock up the cryptocurrency and you allow other users to benefit from this liquidity, and as soon as you lock up different assets, you're going to earn a certain APR percentage per year. Now this depends on which cryptocurrency. Very often the cryptocurrencies with the lowest amount of liquidity offer the highest amount of APR. So here are the current lending rates, and these lending rates are flexible. They change over time depending on the liquidity. So at the moment BAT is at 0.11%. It was at 8.76%, but it dropped quite a bit. The other ones that are pretty good is DAI at 2.19%. You've also got 1.76% for USDC and 2% for USDT and 2.31% for dYdX. So I think you can look at these. What I think is great with dYdX, even if you're not really interested in the lending aspect of the platform and you just want to leverage trade, as soon as you deposit funds onto the dYdX platform, you're automatically earning interest on these funds. That means you can be long on a certain crypto position, you can be long on Ether, and then you'll be earning 0.28% per year. Yeah, I know it's peanuts, but still it's something. If you're long on a DAI position, then you'll be earning 2.19% per year. It's nice. It's definitely nice. So let's look at the exchange, the dYdX exchange. I'll show you how you can connect and also add some funds. To access the exchange, type in dYdX.exchange and then just click on start trading, and this will open the trading interface. Here there's some information that tells you what kind of options you've got. So you can click on one of these and it will bring you to the respective tab. So margin trading with up to 5x leverage. And interest on your crypto assets, withdraw any time. With balances, that means you can lend different cryptocurrencies and then interest, like I mentioned before, and you can borrow assets directly to your wallet. And this is the borrowing aspect. You have to pay a fee in order to borrow different cryptocurrencies. I'm going to ignore this for the moment. So now to connect your wallet, on the top hand right side of the screen, you can click on Connect Wallet, and you've got different options. You can select MetaMask, Coinbase Wallet, Ledger, Hardware Wallet, and Wallet Connect. Me personally, I'm going to use the Wallet Connect as that's one of my preferred Web3 wallets. So I click on that and then use my mobile phone. I unlock it, click on Wallet Connect on the mobile phone. I can just scan the QR code, approve it, and I'm already logged in. It's as simple as that. No complicated bureaucracy, no paperwork to connect, and I'm already ready to leverage trade. But before I do that, I have to deposit some funds. So this is where the left-hand side of the screen comes into play. Here I've got my account balances, and as you can see, everything's on 0. I've got a little bit of DAI because I've used it before. Now you just have to click on deposit to add funds. Now before I click on deposit, you have to realize when you're going on a long position, For example, you go long position on ETH DAI, a trading pair, you're going to have to deposit ETH. And if you want to go short on this position, so you want to go short on the ETH DAI trading pair, you're going to have to deposit DAI. That is something you have to be aware of depending on your trading strategy so that you can deposit the correct amount of crypto. So I'm going to click on the deposit and it's already connected to my wallet. I can select the asset I'd like to deposit. So I've got ETH, USDC and DAI that I can select from. I'm going to leave it on ETH. This is the amount of ETH I've got. And here I can select, so let's say I would like to deposit 0.2 ETH. And this is the interest rate that I would be earning after depositing that. I know it's peanuts, but still. And then I can just click on deposit. So I do that. I will receive a notification on my phone that I have to sign the transaction. I click on OK and it will go through. So now the transaction is waiting for confirmation on the blockchain. As soon as that's confirmed, I will have this ETH represented in my account balances. And you can see it already went through very, very fast. So now that I've got ETH on my dYdX account, I can start trading. And this brings us to the next tab. So you've got isolated trading and cross trading. And this is actually a very interesting feature as it allows for more advanced long and short positions. And then we're going to go into those in a bit. Basically, isolated trading means that when I open a long position with 0.1 ETH, for example, then this long position is maintained within this 0.1 ETH. That means I can use this 0.1 for maybe 5x leverage, but if I get liquidated, I will only lose this 0.1 ETH. With the cross tab, I will be using my complete account balance. So in this case, if I go into a 0.1 ETH long position, I'm not only limited to the 0.1 ETH in that trade, I've got my entire account balance available. So if I've got 2 ETH in my account, that means that if I'm in a long position, then my liquidation price is going to be a lot lower because I've got much more money in my account to cover this position. Let's look at the isolated trading tab. You can select between long and short. Basically, short is more or less the same, but you have to deposit DAI if you're trading with ETH DAI trading pair. More or less the rest of the parameters is the same as if you're going long. Now, if you're in the isolated trading pair, you only be able to do a market buy order. If you want to be able to do a limit buy order, you have to go to the cross trading tab. Now, when you want to trade, you have to have at least 1 ETH trade position, trade amount. At the moment, I'm just going to show you this example with 0.2, but I'm not going to actually execute the trade because it's not enough. So I'll add 0.2 ETH. Under leverage, I can select the different leverage types. 1x is basically spot trading. That means without leverage, you've got 2x, 3x, 4x, and 5x leverage. You can also add custom leverage, such as 2.5x. Advanced, you can select the max slippage. Slippage means the difference between when you click on buy and the actual price that your trade gets executed at. Now, higher slippage can happen if you've got low liquidity, and that's where you can select which slippage you're comfortable with. So 1% slippage, that means you might lose 1% of the amount of your trade just due to slippage. So after you've input all of this information, you get a nice overview of your position. You've got the margin deposit, which would be 0.1 ETH. Trade amount is 0.1. That's too low for dYdX. The expected price that I'd be paying. The worst price is 231.27, and this is probably due to the slippage amount. This might be bigger depending on the liquidity and a higher slippage. Liquidation price would be 131 DAI. So if I'm going a long position and the price goes down and it goes to 131.97 DAI, then my position gets liquidated. The price impact 0%, that means it has no impact on the current liquidity of this trading pair. Interest rate, APR, this is how much I'm paying. Because I'm going in a leverage position, it means that I'm borrowing money to be able to go into this position. And this interest rate is there for negative, so minus 2.83%. The fee on this position is 0.5%. The fee amount is going to be 0.12 DAI. And the expiry is none. If I'm not mistaken, US citizens are not allowed to trade anyway, so it doesn't really matter. And then afterwards, when all this is done, I can click on open a long position, and then it will show this long position under the positions tab. So let's go to the cross trading tab. Now this works a little bit differently than the isolated trading tab. Basically, here you're borrowing assets based on the amount of funds that you have on your account. So I've got 0.2 ETH. That means I can borrow assets with these funds here used as collateral. So here under the limit tab order, I can buy some ETH, and I'll be borrowing this ETH here based on my collateral. So I can say I'd like to borrow 0.5 ETH. And I will select the price where I'd like to buy it. I'll say 227. And this is going to calculate the collateralization ratio. And as you can see here, this information has been updated. I've got 0.2 ETH. I'm going to be borrowing 0.7. And my collateralization ratio is going to be 141%. This can go down should the price go down, and then I can be liquidated. And you can see that this collateralization ratio is going to go up if I borrow less ETH. So if I only borrow 0.4 ETH, this is going to go up to 152%. If I borrow 0.3 ETH, this goes up to 168%. That means my position is a lot more secure because the price of ETH can drop a lot lower before I'm liquidated. Should I try and borrow something like 0.9 ETH, then it's going to be a lot lower. This collateralization is already in the red. It has to be above 125%, 115% you get liquidated. So it's already in the red. It means that this position is highly risky. So I could recommend to have something over 170% collateralization to be on the safe side. So let's put it back at maybe 140, 152% collateralization is all right. Let's do even 0.3 ETH. Here we've got 168% collateralization. Now you can also change between market limit order if you want. I highly recommend using a limit order, as you're probably going to get a much better price. You won't have any slippage when using a limit order. With a market order, it's possible that you have 0.5% or 1% slippage due to the liquidity. Here you can also choose how long you want this order to be active, good till a certain day. So this would be 28 days in the future, but you can also maybe say 10 days. This trade or this position should be active until it gets cancelled. Then when I place a limit order, I won't have to pay any fees, which is a great thing. And it's also one reason why I also highly recommend to use limit orders. The fee is going to be free. If I post a market order, I'm going to have to pay a fee. So here the fee amount is 0.34 DAI. Especially with higher trade amounts, you're going to have to pay attention to the fees and especially the slippage, as they're going to eat into your profits. So that was basically the short explanation of how you can use isolated and the cross trading tab. What you can also do if you're not really interested in trading, you can go on the balances if you want to earn some interest on your assets. It's an alternative to using compound finance, even though me personally, I won't be using dYdX just to earn some interest on my cryptocurrencies. I prefer to use other platforms for that, but this is just so you're aware of it. Under balances, you can also see all the assets that you have deposited and how much you're earning, the balance that is available, and the value of this asset. Under history, you can look at all your trades that you've performed. I haven't done any trades, so there's nothing to show here. So last but not least, I want to talk to you about perpetual BTC swaps with 10x leverage. If you go onto the perpetuals 10x tab, you can start trading Bitcoin USD perpetual swaps. You can deposit USDT or USDC to fund your account. And then as you've done that, you can just buy or sell, and it's always at 10x leverage. You cannot change that. You can perform a market order, a limit order, and you also can add a stop loss if you'd like. Now, when trading the perpetual swaps, you're always going to have a maker and taker fee. It doesn't really matter because it's a little bit different with the perpetual swaps. About the fees, I'm going to share them with you in an instant. So you can just say buy, you can say the amount, let's say 1 BTC, and here it's going to tell you all the information. The worst price would be 9,204, price impact, the fee, it's a taker fee, 0.075%, and this will cost you $6 for this trade, and the total would be $9,163 US. So that is actually pretty great that you can trade BTC perpetual swaps in DeFi. I want to quickly share with you the fees on dYdX, as I think that's something that interests you quite a lot. So the fees are split up like this. You've got the trading pair ETH DAI, ETH USDC, DAI USDC, and PBTC. These are the perpetual swaps USDC. So for leverage trading, the maker, so if you perform a limit order, you won't be paying any fees, which is fantastic. I don't think there are that many other exchanges, definitely not centralized exchanges, that offer 0% maker fees. However, of course, with perpetual swaps, you're going to be paying 0.025% maker fee. So here for the taker fees, you've got two different options. If you're trading with more than 5 ETH, these fees are a lot lower. So 0.15% for ETH DAI and ETH USDC. The taker when trading DAI USDC, when it's more than 1,000 DAI, it's going to be 0.05%. And for perpetual BTC USD swaps, when the trading amount is more than 5 ETH, it's 0.075%. And when the taker fee is less than 5 ETH, then it's 0.5% all across the board. So 0.5% for the perpetual BTC USDC swaps is actually quite a lot, especially since you're going to be paying this fee on the 10x price tag. So if you've got $1,000 in equity and you buy a 10x perpetual swap, that means you're buying more or less one BTC for $10,000, and you're just going to be paying $50 for that trade, which is definitely a lot of money. So last thing I'd like to share with you, and that is really useful, especially if you want to trade with a lot of funds, like maybe more than 50 ETH, then I highly recommend that you open a smart contract insurance to protect yourself against smart contract failures. The whole DeFi space, it's basically in its baby shoes. You never really know when the next smart contract bug is going to happen. So that's why I definitely recommend that you open a smart contract insurance, and it's actually very easy to do. You can do it with Nexus Mutual. This is definitely not sponsored, but I think it's a great way to protect your assets. Super easy to do. You can go onto app.nexusmutual.io. You can select a smart contract to cover. Here you can select dYdX exchange if you're performing margin trading, or you can also do dYdX perpetual if you're trading with perpetual swaps. And then afterwards you can select the amount of ETH that you'd like to insure. You can say how long you'd like to insure, and it will give you a quote. So I think it's definitely great if you're trading with more than 50 ETH or 100 ETH and you just want to protect these funds. So yeah, that was it for this video. Hope you found this interesting. If you've got another DeFi platform that you'd like me to review or maybe give a guide, then leave it in the comments down below. So with that said, I wish you a fantastic day. I'll catch you in the next video. Have a good one. Bye-bye.